Thank you for tuning in to Asset TV. Joining us now for his market outlook is Joe Davis, President and Financial Advisor at Stonebriar Wealth Management. Joe, thanks so much for joining us today.
Thank you for having me, Kristen. It's great to be here.
So right now, markets have been pretty focused on the U.S.-Iran war. Can you talk to us about how that's impacting markets right now, and if you think that could really blunt the rally that we've seen?
So not to oversimplify things or state the obvious too much here, but the war is causing oil prices to increase. And that's a major headwind on this rally at this point. When energy prices increase, it's like a tax on consumers and businesses. It's more expensive to purchase, our cost of goods and services go up, and it's also more expensive to transport those goods around and to stock shelves and get those precious Amazon packages delivered to our porch.
So Joe, connect the dots for us. Exactly how does this U.S.-Iran war cause the increase that we're seeing in oil and energy prices?
I don't want to diminish the effects of what a war can have. I mean, there will be casualties, there'll be destruction, but from a market and economic standpoint, we look at the price of oil, and there are two factors that are contributing to the rise of oil right now. And the first is the flow of oil to the Strait of Hormuz. That's 20% of the global oil supply flowing from the Persian Gulf to the rest of the world. If that strait remains closed, prices in oil could remain elevated for quite some time. And simultaneously, if there's no ceasefire agreement and there continues to be these attacks on enemy infrastructure for oil, tankers, pipelines, that's a really not ideal 1-2 punch for the prices of oil.
So is there a world where you think that the market can move past the conflict and continue the rally that we've seen?
Yeah, there is a reality, there is a world that we can live in where this market rally continues while coexisting with this war. Right now, it's all, as I've mentioned, it's all about oil prices. And if this conflict continues, but oil resumes its transfer through the Persian Gulf and the Strait of Hormuz, and attacks on tankers cease, that is a scenario where markets will resume the rally and this war could continue, sure.
So then, could that just be the taco trade all over again?
On a surface level, all the makings of the taco trade are there. By the way, the taco trade was one of the most successful trades of 2025. And, from an investor standpoint, it might look like this could be an easy declaration of victory. A social media tweet or a post that simply says this war is over, it could cause a short-term rally and an alleviation of oil prices. There have been a few instances where President Trump has mentioned the worst is behind us, or that oil is flowing through the Strait of Hormuz, a tweet that was deleted and caused a pretty chaotic trading day, by the way. So we've already seen some of this taco type of trade occur. I'm a little skeptical to say that this is deja vu all over again in regards to the taco trade. So this is a war. This isn't a U.S. policy announcement. To say that two countries agree that fighting has stopped is one thing, but oil prices are set from global supply and demand. By declaring victory in a tweet doesn't necessarily put things back to the way they were, as easy as it was to say tariffs are no longer in effect. So it's not going to be just as simple as a tweet or social media post in this case, I'm afraid of. Hopefully things will prove me wrong and things will resolve themselves pretty quickly.
So talk to us about some other investing strategies. You just talked about taco. Are there other acronyms that we should be aware of?
So taco, one of the best strategies of 2025. The halo trade is one of the most successful trades year to date. Halo, for those of you at home who don't know, is heavy asset, low obsolescence. So investing in companies that might be a little bit more boring, large machinery, heavy assets. Think of oil extraction, mining, companies that manufacture food. The second ring of the halo, by the way, would be free cash flow. So these companies, while they're not spending their free cash flow on things like AI data centers, they also don't really go out of style either. And so for anyone who's a little nervous about the AI trade, Halo has been a very welcome trade to invest in more blue chip, dividend paying, stable companies, and that's fared quite well for investors this year.
So then Halo really combats some of that AI anxiety that we have seen, because I'm curious to know if AI is going to really dry up, the well of money that we have seen from some of these large tech companies, and loved. Investors have absolutely loved it.
No, I mean, on paper, AI should be a great thing for the economy. It should boost profits. It should boost productivity, maybe even in a healthy way, reduce some headcount for companies. But the narrative has shifted as of late. Is AI going to help companies, or is it going to eliminate them and replace them altogether? In particular to software companies lately, if there's a vibe coder who can simply create a brand new business model using AI in moments, is that going to replace entire companies? I think it's a little too early to make that determination. I personally feel that using AI from a human standpoint, AI will replace humans that don't use AI. I think it's not going to replace humans altogether.
All right, Joe Davis, President and Financial Advisor at Stonebriar Wealth Management. Thank you so much for joining us today. I'm Kristen Myers for Asset TV.
Stonebriar Wealth Management, advisors for your life.
This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process described herein will be profitable. Investors may lose all of their investments. Past performance is not indicative of current or future performance. It is not a guarantee.